Do you ever average down on a losing trade?
No, not for years. And that was one of the things that I resolved to do when I sat on that mountain outside Johannesburg. However, I know people who do, but they do it in a very careful way. They say that it's very, very difficult, especially in the Forex market, to get their entry spot on. So they will average into a trade. So rather than risking that 0.5% on one trade, they'll go in at a quarter, and then if the market gives them a better level, they'll go in at a quarter again. But they then define that the total risk on that trade should not be more than 0.5%. So they split their entries. Mathematically, that is quite a good way to think about it. I don't like it because it breaks the discipline. It's like going on a diet and just having one beer. Okay, it just breaks the discipline. I don't know what you're like, but you know.
This pretty much sums up my day, yeah.
So one chocolate biscuit and you're finished. Okay, so as far as I'm concerned, I don't do that. But I know an awful lot of traders who are exceptionally good traders that in fact split their entries. Some split their entries based on price levels. Some split their entries based on time. In other words, if the market pulls back, they'll buy a little bit, and then 3 or 4 hours later, if it hasn't moved, they'll buy a little bit again, and they will split their entries based on time. But the trick is that the risk in all of the positions must not be any more than that 0.5% that I talked about, although I don't do that myself.